And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It is Friday, November 14th, 2025. And it's been quite the week. Quite the week in the markets, quite the week in the news, quite the week in the week. We hope you have a good day. We hope you have a good weekend. As always, serious talk on everything that affects you. We do not screw around. We'll talk the markets, the economy, your job, your industry, tariffs. Oh yeah, tariffs. Debt and deficits and scams and shams and corruption and government interference. We'll talk that too today. Hopefully we have enough time today. And if you do not get this radio show in your city, we'll post it at GaryK.com. We'll also post it on our X feed. If you don't follow us on X, you should. Just put our name in at X. If you'd like to email us, just be nice. By the way, we'll also put the show on other podcast apps as well as BizTV YouTube channel. Okay. Let's see if I can get through this stuff quickly. Number one. We're just so tired, and you should be so tired. Well, let me preface it. We went independent a long time ago. We still have Republican on our card so we can vote in the primary in Florida, but we went independent. If you have followed us, you know we have no love for either party. And when we say party, we're talking about the people in leadership in the party over the last couple of decades. The lies, the interference, the corruption, the giveaways, the glad handing, the list goes on. And of course, 38 trillion of debt. Just one big gigantic con game. And we're just tired of it. And when we go after one side here, it's for a reason. When we go after the other side, it's also for a reason. And we catch flack every now and then from people, but you know, we're not catching flack anymore. We've been hitting them hard both ways, both sides, and we don't catch flack anymore because we think people recognize this guy's onto something, and that is enough. So I just want to let you know today, President Donald Trump lowered and dropped a bunch of tariffs. And what they are telling us is the reason why they are doing that is because of affordability, and that will lower prices for citizens. So he's been lying to you since day one on the tariffs. His peeps have been lying to you since day one on the tariffs. They have been telling you and I that the tariffs are paid by them, not us, that it does not cause prices to go up. But now they are seeing the polls. Regardless of what the president says about the polls, his poll numbers have been heading south. And when you go deeper into the polls, it's back to affordability. And one of the reasons why the Marxist Party lost to Trump and the Republicans is because they caused massive inflation and told you there wasn't any. So this president's been doing the same. They saw the poll numbers. They obviously got together and said, Mr. President, the tariffs, you put the tariff on coffee and coffee prices have skyrocketed and a lot of Americans drink coffee. Put the tariff on beef and the price of beef has skyrocketed and a lot of people like their beef, Mr. President, and they're pissed off. Oh, okay. So now he's lowering the tariffs. I just have to tell you, it pisses me off so much to have to even say any of this. As you know, we love what this president has done on the border. for the Jewish state and Israel, for crime. Foreign policy, and I think there's going to be more to the Abraham Accords, but then all this stuff with the BS, with the tariffs, it's just enough. We got 4 years of Biden lying to us. The border's secure. Kiss my butt. Oh, Afghanistan was a success. Kiss my butt. There's no inflation. Kiss my butt. Oh, inflation is transitory. Kiss my butt. And then Obama before him. Obamacare. Your premiums are going to go down. Kiss my butt. We just don't want any of this anymore. And this president has been shooting you right between the eyes on tariffs and lying about it. Well, the good news is they've obviously been listening to Investor's Edge and watching me on Fox as one of the people that have been out there complaining about tariffs. And they're lowering them, and that should alleviate a little bit. Good to see. Next, housing. Oy. As you know, the cause of the housing distortions lays at the foot of Jay Powell. It's simple. He printed money to $9 trillion, took that money and rigged the bond markets, took all that conjured up fake money and bought into the bond market, taking 10-year yields down to 0.5%, which got us 3% mortgages. And what did that do? Well, everybody with higher mortgage refinance, terrific for them. Anybody getting new mortgages got 3% or less, terrific for them. But as usual, government causes distortions. And what did that do? Well, number one, who the hell wants to sell a home with a 3% mortgage to buy a home with a 7% mortgage as rates finally normalize because the yuts had to get out of the way because the inflation he caused? No one. So no inventory leads to housing spiking up. Simple as that. And housing prices have gone haywire to the upside. Now, some areas more than others because everybody wanted to get out of crappy blue states into Florida and other places. But we ended up with fantasyland prices, affordability problems. But what's the problem now? Guess what this administration's talking about the answer to the housing? I just saw the new Fed head, who's really a puppet for the president. He wants to lower interest rates. Lower interest rates? How is that going to help affordability? If you lower the Fed funds rates, it could have the 10-year spike higher, which it has, and that's mortgage rates going higher. That doesn't help affordability. You know what the answer is to housing? Get government out of the way. Let's not even hear from them. Let the market do it. You know what the market will do? I promise you, in time, prices will come down because demand will go down because of affordability. It works on its own. And as prices come down, that feeds on affordability to the better. And if you stop lowering the short-term rates, maybe the long-term rates will stop going up. And by the way, they've been starting to tick up again. But no, we're geniuses. We know better. Let's get involved. Yeah, there's a thing about building some more homes. That doesn't make them more affordable. Doesn't necessarily lower prices. Let the free market do it. The free market has always normalized things over time. It's supply and demand. It works great. But no, they're going to screw it up again. Because they think they're big, and that's one of the problems of government. They think they're smarter than the market. They think they're better than the market. And they're not. They really are not. So I'm just letting you know I'm in hopes. Get the hell out of the way. Leave it alone. Leave it be. Unfortunately, they are interlopers. They are interferers. So we'll see what happens. We'll stay on top of it. That's the housing thing. Up next, wild markets. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. So before we get into the final numbers, there's a lot of jello moving on the plate. And there's a bunch of things I want to bring up today, which kind of amazing. Do you know how I have said to you, be careful about owning no sales companies? And you do know that a ton of no sales stocks are down between 50 and 70% in just the last 6 weeks. But we have also said to you, boy, we've missed some big moves in no sales companies, and we bring up biotech names all the time. We won't buy a no sales biotech. Merck, you know Merck, they just paid $221.50 a share for a company called Cidara Therapeutics. $9.2 billion in cash. In cash. Cidara Pharmaceuticals has been public for 10 years with no sales, and Merck is buying them. The stock was up 105% today to $217.67. Now, I'm reading here, valuing the transaction at $9.2 billion, but at the price the stock is at today, it's showing only $6.8 billion. Something's not right, because if they're paying cash, it should be a lot closer to that number. Anyway, this company has no sales, and here's the amazing part about this. So we didn't own it. The amazing part about this, Merck doesn't know, as of yet, whether their product's going to sell big time. You see, let me read this to you. CD388, I guess that's the name of their drug. A long-acting strain-agnostic antiviral in phase 3 for preventing influenza in high-risk individuals. The candidate, this company, does have breakthrough therapy and fast-track designations and has showed efficacy in the phase 2B trial. Phase 1, phase 2, phase 3. So I gather Merck is smart enough to recognize, yeah, this thing is going to sell. But they're paying $9.2 billion in cash? They're going to have to sell a lot of this stuff. And then make a lot of money. So just letting you know, there is the other side of us saying to you, we're not going to buy any no-sale stuff. There is that other side. So congratulations if anybody has Cidara Therapeutics. Dang. And I'm going to have to look that up because it says here $221 they're paying for in cash. The stock's at 217, but I'm looking at shares outstanding, total. I guess there may be some shares not being shown on my screen. Anyway, that's that one. The next thing I have to bring up before we get to the final numbers that I think is really of import. Bitcoin's getting smoked again today. It is now down, let me see, 72 to 53, that's 19. Got to be about 24, 25% from the highs of about 5 weeks ago. And now, the talk of the town is that MicroStrategy is causing a lot of problems. That we have been complaining to you about the stock and to avoid it. Simple MSTR, that's now called strategy. The stock has gone from 457 in July. It's now under 200. It was 543 last November. It's now 200. That means it's down from the highs, 70%? 543? 65%. But Bitcoin's only down, not even close. In fact, Bitcoin is only down a little from last November. How can that be? Well, this MicroStrategy guy, his name's Sailor. It's not spelled sailor like sailor on the seas. Keeps leveraging to buy more Bitcoin. And then I read he's selling Bitcoin to do this. And then it looks like I don't know how to explain it. I'm wondering if the Bitcoinites are worried about forced selling because of leverage. Just letting you know. Just letting you know. Because today, the NASDAQ has had this unbelievable reversal, and typically you would see Bitcoin reverse with it, and it's trading near the lows of the day. The Bitcoin price, I only have the ETFs on my thing, but the Bitcoin price is currently 94,358 at this second. The high was 124,310. So 28 on one, about, let's call it 23 to 24% from the highs. So just letting you know, and I have to tell you, on this MicroStrategy, I don't know what's next. We've been telling you for a while, avoid something up. I'm thinking that the market, forget what anybody thinks that there's going to be some forced selling because, look, I don't know the guy, but there are a lot of people calling what he's been doing as a scheme. And all I know is when you are leveraged to the hilt in one asset and that asset keeps going down, that's a problem. You know what caused 2008? Leverage. Leveraging those mortgage-backed securities, 2008. The ass clowns back then were leveraging assets at 10 and 20 to 1, which guaranteed bankruptcy. Anyway, hey, up next, rest of the market, whatever else. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. You can go look up Ron Baron, B-A-R-O-N. I was at the Barron Capital Confab at the Lincoln Center in New York City for a bunch of the day today. And I got to see CEOs of On Holdings. But I got to mention one, by the way, the following company I'm about to mention, we are not advocating buying, selling, shorting, or covering. I saw the Shopify symbol SHOP, and by the way, we do not own the stock as of now. Saw the CEO. I thought the guy was terrific. I thought it was a fantastic presentation. I'm going to have to do a lot more research on the company. I mean, it's been a great stock through the years. Actually, it's just back to its 2021 highs. But before that, I mean, it's had a big move up. Very impressed. Very impressed. Also got to see, and I didn't know him from anything, this comedian Sebastian Manamagbat, blah, 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 ski, or whatever his name is. They bring on the different acts throughout the day. I believe Shania Twain was there. I didn't see that. I picked the comedy. Sebastian, I don't know what his last name is. And I think they have a headliner tonight, but I don't know who it is. Anyway, that's a sneeze. I don't have a dump button because I'm on my iPhone right now. Anyway, very impressed. And you should look up Ron Barron. Brilliant. He's the opposite of what I do. I wish I can do what he does. He's owned Tesla for like forever and is up bazillion dollars. They will hold through bull markets, bear markets, drawdowns, you name it. They are company specific. They don't care about bull and bear markets. God bless them. That's amazing. And they've got a hell of a track record. Good on them. So, I'm going to spend the next few minutes on the 50-day moving average because of today. I want to repeat something to you. They tell you cannot time the market. That's because they've never tried, because you have to work at it. Not going to call them liars. We're just going to say they've never tried because you have to work at it. So, when you were looking at price and date on a chart, bull and bear markets trace out patterns, and very simple. Patterns going up are good, patterns going down are bad. Duh. And throughout history, and going back ages, before there were a ton of mutual funds and hedge funds, the 50-day moving average consistently got defended in bullish phases. And as we have explained to you, the 50-day moving average, all it is if you're plotting price on a piece of paper and each day price moves, the 50-day is the last 50-day closes. You add it up, divide by 50, and you get a smoothed out line. And in bull markets, price ascends above an ascending 50-day moving average, and all pullbacks to that area are contained, and then price resumes the ascending. If the market weakens, there can be points in time where price gets below, but just sits just below, sits around, hangs around, stays around, and then gets back above, and then breaks out again. But in bull markets, for the point of this is that price keeps ascending along, and all pullbacks are contained in and around there. We have proven it out. And how do we prove it out? Well, we print out thousands and thousands of pieces of paper of charts of stocks and sectors and markets and countries and commodities in bull markets. It's the one consistent characteristic of a bullish phase in the market. Simple as that. Full stop. The next part of that equation, the longer it ascends along that 50-day and the more it tests the 50-day and succeeds. The end problem is it conditions the masses that the next time it's going to succeed again. But if the next time it breaks, the masses are not ready and do not believe, and they get caught. We don't, because we recognize that other part of the equation. The longer it holds, and the more times it holds on visits, the more conditioned the masses are. And typically you're going later stage. And that's because that entity had a very strong move up over a certain period of time. And if you've never seen one of our award-winning webcasts on the 50-day moving average, we, from time to time, will do special webcasts going back to different bullish phases. And they all look the same. Looking at a photo album for familiar faces, the 50-day moving average. And physically, what's happening there to do that? It's your big institutions, your big money crowd in recognition of those areas and acting to defend it until it can no longer be defended. And that's when it becomes somewhat of a give up. And that's when you break through the 50-day as things worsen. And then you go into a correction of import, if not a full-blown bear market. That's all it is. And do they collude together? Are they on the phone? No. They just all know throughout the years how things work. They know what we know, that everybody says you can't do. And we're cool with that. That's the 50-day moving average. And then there's the 200-day moving average. And if you let it go down there, that means you really fell a long way. But that is really hell if you break the 200-day. For instance, and by the way, that's just the last 200 days added up, divided by 200. Oracle today, which just dropped from 322.5 down to 210 in 5 weeks, hit the 200-day moving average today within a buck and bounced up 12. Now that's a bear market though, and a bear market bounce. It's not ascending, it's a little recovery, but we also watch that also. There are other little moving averages. I know the traders will look at a 10. A stronger moving average is the 21 because it's only the last 21 days, but that's only for the real strong. For me, it's always the 50-day, and there's a reason why. We are bringing up the 50-day moving average again today. Because in case you do not know today, the NASDAQ right at the open today hit 22,835. 22,835. No, I take that back. It hit 22,436. My bad. Wait till you hear how it finished. Up next. I'm Gary. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. Yeah. The people that love Trump are on TV blaming Biden for the higher prices at the grocery store. I got news for you. They're right, but they're giving no fault to Trump as usual, which means they're BSing you. Be careful. Okay, back on point. The NASDAQ today hit 22,436 in the morning after yesterday's horrible drop. At 9:35, 22,436. 464 points below the close. The NASDAQ was down 434 points in the first 5 minutes today and finished up 30. You ready for this? The 50-day moving average is 22,835. It closed at 22,900, 65 points above the 50-day moving average. They defended the NASDAQ today, which means they defended the NASDAQ 100, which hit 24,534, closed at 25,008. That means 460 points the NASDAQ 100 was down, finished up 14. And just above the 50-day moving average. But Gary, I thought institutions defended the 50. How did they go below? They defend the closes. Very often what happens is what is known as an undercut. It's undercuts. And typically the undercut happens early. The NASDAQ and the NASDAQ 100 were defended like no tomorrow. Now, I will tell you this, at one point today, amazingly, the NASDAQ hit 23,073, was up 203. So it gave back. To me, the important is what it got back. But we're not done. What do we tell you the most important group is? The Philadelphia Semiconductor Index today, which dropped 7.5 points. The 50-day moving average, 66.39. It hit 65.87 in the morning, undercutting. Closed strong at 68.11. Decently back above the 50-day. Which takes me to the most important stock to that area is NVIDIA. You ready for this? NVIDIA today finished up $3.31. Terrific. It hit a low today of 180.58. Closed at 190.17. So at one time today, it was $9.50 lower. It was down over $6 and reversed back above it. Do you know what NVIDIA did last week? The exact same thing. So the most important semiconductor stock got defended also today. The big guns were out there. They were in recognition. Does this hold? I'll let you know next week. We deal in real time here. A great defense today in the market of the semis, NASDAQ 100, and the semis led by the number one stock. And as long as that holds, good news. I take that back. Potential good news. And I say potential because on any drop, it causes damage in the market. Drops take pretenders or lessers off the table. And I can tell you I have a few dozen stocks that have broken the 50-day and now are living below the 50-day moving average. Just letting you know. That's the story today. I call it a goal line stand. When I sent out my notes this morning, I had stated, look at this, look at that, look at this, look at that, look at this, look at that, look at this, look at that. but we are going to need a goal line stand right here, and you got one today. For now. Again. So another day where those big indices did not break below the 50-day at the close. So since late April, not one day have we had a close below the big indices, but we've now started to test them a little longer, a few more times, and eventually, as we said earlier, we'll get late stage, finally break it, we'll recognize it, the masses will not. I can promise you the masses today, sigh of relief. A big sigh of relief in the market. Now the Dow was down 300. I will tell you something that was interesting. The banks, which failed miserably yesterday, were not in great shape today. Goldman Sachs down 14, JP Morgan down 6. The two most important names. That's a hum. Let me throw out also MasterCard and Visa really breaking down now. Something we're going to be watching going into next week. So that's basically the story. I got a lot of scanning to do. We'll see what comes of it. We hope you have a good weekend. Drive carefully. And when you get home, do like we do. Quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You will feel better. I promise. Stay well. Be well. Until Monday. Peace out all. Good night.